When most people think of the Knights Templar, they imagine holy warriors, white mantles with red crosses, and secret societies guarding the Holy Grail. But that image is a convenient myth. If you want to understand why the Templars became the most powerful force in the medieval world, and why they were eventually destroyed, you shouldn't look at their swords. You should look at their ledgers. Long before the Medici or Goldman Sachs, a group of monks discovered a secret that modern central banks still rely on. Wealth isn't about what you own. It's about how much people trust you to move it. They didn't just fight wars. They built the first global financial infrastructure, solved the problem of frozen capital, and eventually learned the hard way that when you become the state's biggest creditor, you aren't just an asset, you're a target. To understand the Templars, we have to look at the problem of the 12th century. Like the world described by Al-Ghazali, it was a time of expanding trade but massive physical risk. If you were a pilgrim or a merchant traveling from London to Jerusalem, carrying bags of gold was a suicide mission. Bandits, corrupt local lords, and barbaric instability meant your capital was likely to be seized long before you reached your destination. The Templars offered a solution that was centuries ahead of its time. They invented the letter of credit. It was a system of information asymmetry and trust networks that mirrors what we saw in Baghdad's Golden Age. You could hand over your gold to a Templar branch in Paris, receive a coded parchment, and withdraw the equivalent value in silver in Jerusalem. The gold never moved, only the information moved. By doing this, the Templars did something revolutionary. They reduced transaction costs. They turned the frozen wealth of the nobility into circulating capital. Like Al-Ghazali warned, hoarded money is dead money, and the Templars were the ones who brought it back to life. How did they do it? Why did people trust a group of monks with their entire family fortune? The answer lies in what Ibn Khaldun called azabiya, social cohesion. The Templars weren't just a business. They were a brotherhood with a shared moral compass. Because they took vows of poverty, the incentives for individual corruption were, at least initially, very low. They created a global infrastructure of trust. They had their own ships, their own castles, and their own legal immunity. They were a sovereign financial entity operating within other nations. But as Ibn Khaldun observed, prosperity, left unchecked, carries the seeds of its own decline. Success changed their behavior. The Templars stopped being just facilitators of trade and started becoming speculators and landowners. They began to behave like the elites who drift away from their productive base. They owned roughly 9,000 manors across Europe. They were no longer just monks. They were the global knowledge economy of the 13th century. By the year 1300, the Templars had committed the ultimate financial sin. They had become the primary creditors to the kings of Europe, most notably King Philip IV of France. Philip was a ruler who faced a classic Roman problem. His wars were expensive, his bureaucracy was expanding, and his tax revenues couldn't keep pace. He did what every desperate ruler in history does. From the Roman emperors to the Abbasid caliphs, he tried to manipulate the system to wipe out his debts. Philip first tried debasement, reducing the silver content of the French currency. When that caused inflation and riots, he turned his eyes toward the only entity that had more real assets than the state, the Templar Bank. This is where the moral hazard of the Templar system became visible. They believed their cohesion and their institutional power made them untouchable. They thought they were too big to fail. But as the Code of Hammurabi reminds us, systems don't just manage money, they decide who absorbs losses when things go wrong. On Friday the 13th, October 1307, King Philip struck. He didn't attack them for their sins. He attacked them to liquidate his liabilities. By accusing the Templars of heresy, he didn't just destroy the men, he seized the collateral. He used moral language to solve a financial problem, a tactic we still see today when governments use crises to reconfigure the rules of the game. The Templar collapse was a social realignment. The invisible glue of trust that held the medieval economy together was ripped away. When the world's most trusted bank was declared a criminal organization overnight, the incentive system of Europe changed. People realized that no amount of cohesion or contract law can protect you if the person who writes the laws also owes you money. What is the lesson for us today? The story of the Templars proves that money is a social organism, not a mechanical object. It relies on a moral ecosystem of trust. When that trust is abused by the powerful, or when the arithmetic of debt becomes unavoidable, the system doesn't just bend, it breaks. Today we live in a world of fiat currencies and massive debts, where central banks print trillions to manage the same kinds of crises Philip IV faced. We think we have escaped the cycles of Ibn Khaldun or the debasements of Rome, but the oldest financial rule on earth still applies. Someone always pays. The Templars learned that being the infrastructure of trust is the most profitable business in the world, until the moment the system decides it's cheaper to destroy the trust than to pay the debt. History doesn't repeat, but if you don't understand it, it will crush you all the same. If this gave you a new perspective, hit subscribe and like the video